you can never really time the bottom of the market. Once you see the bottom of the market, you missed it. And so, it's sort of like a curve. You got to come in at a certain point and try to get, somewhere in the bottom half of the curve, because you can't time the bottom 100%. And that's why we really think now is the time to deploy capital if you've been sitting on the sideline. And
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, everybody. Welcome to the Real Estate Pros podcast. I'm your host, Michelle Kesil, and today I'm joined by someone that I'm looking forward to chatting with, Irwin Boris, who is a former CPA with the real estate underwriting background and now has 30 years of experience in real estate, finance, investment, and asset management. So excited to have you on the show today, Irwin.
thank you for having me, Michelle.
Of
Glad to be here.
course. Yeah, I think the listeners are really going to take something away on how you're approaching finding good opportunities, collaborating with investors, and growing your investment business. So excited to dive in.
Sure. Where would you like me to start here?
Yeah. So first off, for those who are not familiar with you and your world, can you share what your main focus is?
Sure. Over the last 30, 40 years, I've been in all the asset classes. We've been in retail. I've been in multifamily. I've done hotel work. That's how I started, as a hotel auditor when I practiced accounting. Done construction lending as a lender. And so now we're primarily focused on what we call shallow bay flex, which is smaller, lower ceiling height that's used for industrial and distribution space. Think of the plumber, the electrician, the painter. They have a small office piece in the front, and then parts, in the back to drive the van in, load up with the parts, and go out and take care of the service calls. To regular traditional industrial, whether it's manufacturing or just like an Amazon type distribution center, where it's just trucks coming in, people sorting the widgets and repackaging and going out. And I really learned to like this asset class because, in changing environments where insurance costs tend to fluctuate, payroll costs tend to fluctuate, municipalities are always trying to get more revenue by raising your real estate taxes. This asset class, the net income is pretty insulated by triple net leases or modified gross leases at the very least, where the tenants are responsible for 100% of the increase in costs.
Yeah, absolutely. So how do you find opportunities and work with this specific asset class?
Sure. We, of course, we speak to all the national brokers as well as some of the local brokers, but I find that you got to be careful of how much you want to pay. Everybody gets attracted to a property, whether it's sexy, whether it's ugly. And I'm not looking for assets that I'm putting on the corporate brochure, like Blackstone or Starwood. I'm looking for properties that are always going to stay full. The tenants are always going to be there. I could always replace a tenant, and they're always going to generate cash flow. And so a lot of times we have a number that we'll buy on. And if we can't make our price, we follow the deal. And sometimes after a year, being on the market, sellers become a lot more flexible. We're finding the bid and the ask between buyers and sellers is still wide. And after, deals fall out of contract once or twice, and the seller, it's like trying to buy a car in Dallas after a hailstorm. Once they're dinged up a little bit, everybody's a little more flexible on pricing. I'm never going to be the high price buyer, but I'm going to be the buyer that closes.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Awesome. And what do you feel are some of the main keys that have allowed your business to be able to scale and continue to run smoothly?
I think it's the simple fact that we generate positive cash flow. It's not like, a value-add apartment building where you're upside down and you have to pray you can get all this capital deployed at the right price, at the right trajectory, at the right speed in order to move your rents. Here, it's a very boring investment. We look at what the current rents are. We look at what the leases say, and we really look at why the tenants are there in any specific market. So, if I said to you, Michelle, compound your body weight 3% a year for the next 7 or 10 years, you said, no, I'm not thinking about that number. And that's how we know that, we're growing the money slowly, but at the end of the day, we have created a lot of value and, a lot of wealth at the same time.
Yeah, absolutely. So you mentioned that previously you were more in like multifamily and other type of investment strategies. What kind of made you pivot into where you're at now?
Thank you. We've always had industrial and flex and shallow bay flex in the portfolio, along with multifamily. And when we started seeing the operating costs of apartments really start to climb, and that's money that comes out of ownership's pockets. Everything from the cost to renovate an apartment with hard surface countertops and plank flooring and how sometimes you need to do a lot of electrical work. Sometimes you blow through a lot of air conditioning units or hot water heaters. That and probably about 4 or 5 years ago, when insurance costs went from $300 per apartment to $1,100 per apartment, we said that's it. Because that wasn't anything I could pass on to the tenants, and that asset class really got hammered with increases of insurance by some of the carriers, especially if you were built before a certain age and you were within a certain distance to a large coastal body of water, or in certain, markets that are prone to hailstorms or hurricanes, where we saw that the increase on industrial and shallow bay was very moderate as compared to what we were seeing in our multifamily portfolio. So as we sold the multifamily, uh, you know, before COVID, during COVID, even the last one we just closed a couple of months ago, we've just continued to, double and triple down on shallow bay and multi-tenant industrial.
Awesome. And you mentioned that you partner with investors or, yeah, other people on these projects.
Yes,
What
we
does
do.
that look like?
It started off where it was all 100% of our money. But over time, friends, family, other families that we know have said, "Hey, we don't have an exposure to this asset class. How about inviting us into some of your deals?" And now we you know, invite. It's open to anybody. Sometimes you might have an institutional investor who takes a piece, or or the entire piece of equity. Sometimes you have, 10 other investors. Um, and we have investors calling us all the time because they know that we distribute every quarter. They get a monthly financial statement, or sometimes a quarterly statement, depending on what's agreed upon. And the only thing they ask me is, how come the accountants take so long to generate a K-1 for their income tax returns? So they know it's a boring investment. And right now, we find that a lot more are looking for a certainty of current income than they are over betting on the uncertainty of an internal rate of return 5 years from now.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, absolutely. And when you partner with people, are they more like passively investing and you guys are doing like the upfront work?
No, they are passively investing. They ask a lot of questions. I like to do the investor relations myself because I think it's important that if an investor has a question, they should be able to get an answer at that time from somebody who's involved from, a sort of a cradle to grave position where they're involved with the underwriting, the acquisition, the deal selection, the closing, and the actual management of the asset, than it is to deal with somebody who's just there to take questions and then field answers. Uh, so we've been very successful at that. And so we have investors. Some have written checks for, $500,000, $100,000. Most investors we have are probably $250,000 and up. We have a few that write $1 million plus checks, but they are all passive. And I am available nights and weekends because we do have a lot of doctors and surgeons and people in other time zones, other countries. So you have to make yourself available. And we treat our investors like family. So we're very happy to entertain them. And if they're in town, they want to come to the office, they want to go look at the property. We try to make sure that it's 100% open book. And some of them have complained that when we send out the monthly financial statement, we're jamming up their email with 10 megabytes of data. And they don't understand what they need it for.
Yeah, awesome. What are you most focused on solving or scaling to next in your business?
Well, I guess I'm always focused on the sustainability of every investment. We speak to the tenants several times a year to, how's your business? What do you see in the market? There's a lot of new construction nearby. It's just good to understand if they're in an area that's growing, is their business growing? Do we foresee them having an economic problem where I might have to replace them? We like to get way out ahead of that. And that's why with lease renewals, we have, provisions where you have to renew 6 months in advance, 9 months in advance, or at least let us know a year in advance, depending on how many square feet you occupy. Because this way we have a lot of runway to put the property on the market. Normally when a broker walks a prospective tenant through your space, you wake up and say, "Oh, I didn't renew my lease. The lease said 9 months in advance. I better call the owner." I know it's sometimes a shock to the system, but we have to worry about, protecting the equity. The first rule is don't lose money. And that's also the second rule. But as far as growing the platform, I guess there are probably more opportunities than I could close right now, and we like to give 100% attention. So we try not to have multiple deals on our plate at the same time. I don't want to have to try to close two things at the same time because you sort of have to have one eye on each property through the process. We want to have both eyes and both hands in there. But there are probably a lot more opportunities than I could capitalize overall. And so probably one of the challenges is growing the investor base. And we've been very lucky with that, where every investor keeps bringing a friend or a colleague, and then the next investor brings somebody else in. Again, probably the biggest challenge everyone has in this market is trying to raise equity.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, absolutely. What would you say is your criteria for knowing that an investment is going to bring in the cash flow that you're looking for?
It's basically the spread between your going in capitalization rates and your cost of finance. The wider that is, the greater success you have at looking for cash flow. Now we're also looking for deals that on a fully capitalized acquisition can pay 7 to 8% in the first year. So you're looking at probably transactions that are a high 7 cap or 8 cap on in-place income to begin with. And then you're also shopping the market for the best financing out there, which right now is either local banks or life insurance companies. So we're cognizant about the location of the assets. We're cognizant on the condition of the asset and the tenancy and the lease structures, because we want to make sure it's financeable. Nobody likes to put a deal under contract and not be able to finance it, favorably. Uh, we try to avoid CMBS loans, but they are a necessary evil, depending where life insurance companies are during the year and how much allocation they have left. And then also, if it's a much higher cap rate deal, I'm less interest rate sensitive to really generate the cash flow to the investors.
Yeah, absolutely. Is there a specific networking or marketing strategy or way that you are meeting these investors that you partner with?
One of them is through, being a guest on podcasts that people see. They call me. I'm highly searchable on Google. I have a calendar link in my LinkedIn profile. People want to book meetings to just chat about the asset class. Sometimes they just need some help with a deal they have already, don't know whether to make a capital call or not. I also attend a lot of industry functions where I know investors will be there. Whether it's family office events, RIA wealth events, accredited investor events. And, I find that the best way to meet people is not try to sell them anything. It's just to talk and to try to educate them and stay in contact. I think of it more, more like dating. You have to see if you like the person. Do you want to talk to them? Do you want to have dinner with them? You develop a relationship. Where the one thing I did notice with some people that try to raise equity and meet new investors, they call you up. We need the money in 15 days or 20 days or 30 days. I'm like, it doesn't work that way. And if an investor actually did write the check that fast, I worry about that investor, and I'd also worry about the project. Nobody likes a high pressure sales.
Yeah, absolutely. Do you have any advice for investors that are maybe earlier in their career and just starting out and some things that they could look out for?
I think you really have to understand the offering materials. You have to understand the asset class, uh, and you really have to look at who you're investing with. Is it somebody that's a more of a syndicator that has thin equity in the deal that keeps the lights on through generating fees? Is it somebody that can sit for a long period of time and not do a deal? Like as interest rates moved, I think there was probably a year and a half we did nothing except manage our existing assets. And also you have to understand what their investment criteria is. For us, we look at every acquisition as if we're going to own it forever. And we've had assets for 15, 20, 30 years, because once it's generating revenue, do you really want to sell it? And we found that over time, even though everybody traditionally underwrites for a 5-year hold, and that's what the pro forma returns are based on, when you reach that point in time, most of the investors will say, well, why don't we just refinance and take some cash off the table, continue to hold it, because we don't want the money back right now. We have to find someplace else to put it. We have tax issues. Uh, And, we've had deals where we've converted the entire partnership to tenants in common so people can go and exchange. They can come with us. They can go on their own way, but we try to be, tax efficient and keep that in mind for our investors.
Yeah, absolutely. That's important. So, what do you feel are some of the biggest opportunities in the market right now for investors to take advantage of?
I think because of all the growth and data center growth, and all this AI, and as these data centers get developed, a lot of the smaller industrial and flex in the surrounding areas will see a lot of rent growth because you have vendors that need to continually maintain those energy grids, the air conditioning, the cooling systems inside these things, and have to service them. And so, and because nobody is building the asset class, how we look at the deals, I think they're in high demand, and that's probably why we always have plenty of opportunities to choose from. I think that we're at an interesting point in the cycle where if you're in this space, it's a good time to take advantage of it. You can never really time the bottom of the market. Once you see the bottom of the market, you missed it. And so, it's sort of like a curve. You got to come in at a certain point and try to get, somewhere in the bottom half of the curve because you can't time the bottom 100%. And that's why we really think now is the time to deploy capital if you've been sitting on the sideline. And so we got all our oars in the water, so to speak, paddling the boat to try to find more opportunities.
Yeah, definitely. Thank you for sharing that perspective.
My pleasure.
So before we wrap up here, if somebody wants to reach out, connect, learn more, where is the best place people can find you and connect with you?
I would say, put my name into the search bar in Google. You'll find me on, the various businesses I'm affiliated with. LinkedIn has, as I said, has my calendar invite. It has an email address, even has my cell phone number on my LinkedIn profile. Don't be shy. Feel free. You want to send an email, you want to send a text message or an email on LinkedIn. I do respond. Sometimes it takes a day or two, but I try to respond to everybody personally. I don't have one of those automated AI systems that just kicks back responses. Find that when I get those responses, I'm like, I don't think you ever read what I asked because it's just too machine-like. And, I try to answer the questions to the best of my ability and make myself available to actually meet with people in person as well.
Awesome. Well, appreciate your time and your perspective. Thank you for being here.
No, my pleasure. I'm happy to come back again. It's an interesting asset class. I think it's been overlooked for many years, although more people are talking about it. And I think the fact that we're at an interesting point of the economy where there's a big push for onshoring of manufacturing, that this product is more in demand than it has been in the past.
Yeah, definitely. Thank you.
Sure, my pleasure.
And for the listeners that are tuning in, if you got value, make sure you've subscribed. We've got more conversations with operators that are building real businesses, and we'll see you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.